Welcome to the August 20th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts and what time frames and indicators we use. And if you look to the left, which is the daily, and the right, the weekly chart, we try to keep it pretty simple. We have a few moving averages and then price and volume. We also have this RS line here, but yeah, it's pretty simple. Just a 10, 20 EMA, 50, 200 SMA, and on the weekly, a 10 and 40 week SMA. And rather than focusing on indicators, we choose instead to look at reversal candles, big volume up days, inside days, NR7 days, tight ranged action, light volume. All these things offer us clues about what a stock may or may not do over the next few days. And it simply takes the place of indicators for us. And they definitely have their place, but we just like to keep it simple with price and volume and a few moving averages. So let's get to the charts. First up is the NASDAQ Composite, which for the second day in a row closed below the 50 MA. And given the sell-off of the past few days, today's recovery was decent. Not a great close. And there's this downtrend line here to contend with. And if we look on the weekly chart, it's undercut the 10-week moving average. And it's in danger of losing the 10-week for the first time since late May. So it's been 12 weeks since the last break. On the S&P 500, where the 20 EMA was initially support a few days ago, it is now resistance. Again, a decent reversal off the lows, but this index also remains vulnerable to further selling. And on the weekly chart, there is an interesting spot just a bit lower here. There's the uptrend line and the 10-week moving average and 2 weeks worth of lows all around the 43.50 to 43.80 area. And looking quickly on the hourly chart, see the price action is coming into a downtrend line and a declining 20 EMA. So it may be tough for the S&P to push through this 44.20 to 44.30 area and hold. And finally, IWP, which is the Ishares mid-cap growth ETF. And we use this index to track how growth stocks are performing. And it looks pretty much like the NASDAQ Composite as it closed below the 50 MA for the second day in a row. Nothing about Thursday's close is that special. If there was a close higher up in the day's range, that would have been a reversal candle and probably increased the odds for higher prices. But the close wasn't all that good. And IWP has also yet to take out the 20 EMA and hold on the hourly chart to the right here. And with all the main averages below the 20 EMA on the daily chart, there's just no reason to step on the pedal in terms of long exposure. So what we're looking for next is a buy signal, which could either be a follow-through day, a gain of say 1.7% or more in heavier volume in the NASDAQ or the S&P 500, or the price action reclaiming the 20-day EMA on the daily chart. One of those two could trigger a buy signal in the timing model. Until then, we're most likely going to remain in cash. However, if a pullback setup develops within the next day or two prior to a buy signal, we may take on a small position. So the model portfolio is 100% in cash right now, so there's no open positions to cover. So in terms of what's out there, what we're looking at, so as of Thursday's close, UPST is probably one of our top buy candidates after a monster gap up, big volume here on 811 and follow through. And really not buyable for us until it pulls into this rising 10-day EMA. And for some of you, it's possible if you want to use the 8, that'll work. It's a little bit quicker in its response, but we're using the 10 right now. So UPST is definitely on our watch list. DOX, a big volume breakout to new highs. And a bull flag-like pattern. If market conditions were a bit more settled, taking DOX over the high of this inside day is something we could do. Looking for immediate follow-through. DDOG continues to hold the 10-day MA, though, has stalled 3 to 4 times at 135, 136. And team is trading in a tight range after gapping up on earnings. If when conditions improve, could be in play above 344, 345. LC broke the 10-day MA, but did reverse higher on Thursday. A break of this downtrend line could put LC in play over Thursday's high, but again, market conditions are not ideal, and we'll also be looking for the price action to possibly test or undercut the 20-day EMA, but remain above the close of the initial gap up day, which is often a big support level for these gaps. And market conditions are not ideal for breakouts, but just want to mention Cyber here is trading in a tight range near highs. GXO, which is a recent IPO, showing bull flag type action. ALGN is more of a pullback type entry. And DLO gap up on monster volume. Not a great close, but if the price action remains above the 62.50 area, it could have a shot of working its way higher. So just a quick recap, broad market averages are below the 20-day EMA on the daily chart and are still potentially vulnerable to further selling. So for now, it's best mostly to remain in cash. Maybe you might have a setup or two you're looking at for an early entry. That's fine. And so our job is pretty simple over the next few days, just to monitor stocks that are showing relative strength and wait for some sort of buy signal, such as an index to reclaim the 20-day EMA or a fall through day. All right, well, thanks for joining me. Have a great weekend. We'll see you next week.